Welcome to Christian Financial Perspectives, where you're invited to gain insight, wisdom, and knowledge about how Christians integrate their faith, life, and finances with a biblical worldview. Here's your host, Christian investment advisor, financial planner, and coach, Bob Barber.
Welcome to our 112th episode, or our fourth video episode.
That's right.
Of the podcast. And today we have a pretty interesting topic. Bob, you want to give us a little bit of an intro for that?
Well, before I do, I got to say that sometimes people will accuse me of, like, do you always look at the glass like it's half full? And yes, I do.
Yes, I can confirm that. He does.
And you got to look at everything from a positive viewpoint, in my opinion, even when we're in a bear market.
Yep.
So what did I do? I made the title of today's program,
Benefits of a Bear Market.
Who would do that?
Well,
what kind of person
you.
would do that?
a
Yes.
perpetual optimist.
Yeah. So there are benefits of a bear market, believe it or not. And kind of in this bear market series, we did the bear market newsletter special edition. The last few programs that we've made have been on questions to ask in a bear market, how a Christian should respond in a bear market. So today we're going to talk about the benefits of a bear market. So instead of looking at things negatively when the markets are way down, look at them positively.
Yeah.
Okay? Because there's some great opportunities out there.
Definitely. So let's start with the definition. A bear market is when securities prices fall 20% or more from recent highs amid widespread pessimism and negative investor sentiment. So we're there.
We're there.
Yep.
There's a lot of stocks that are down 25, 30, some even down 50, 60% right now.
Yeah.
Mm-hmm.
Individual, not necessarily the market as a whole, but
Man,
like individuals.
They're on sale.
Yeah, they're on sale. So another interesting fact, not definition.
Yeah.
The average bear market can last around a year, while the average bull market, when prices are increasing, lasts over 4 years.
But people remember those years.
They do.
They remember the months in those years.
And those 4 years have an interesting effect on people. 4 years ends up being about long enough for people to forget that we are going to have a bear market again.
Exactly. Yeah. Yeah.
And they also forget that the 4 years of plenty were after a bear market.
Mm-hmm. You know,
so,
you know how I love my pastor, and we've been going to Oakwood here in town for years and years, and he always says, during the good times, enjoy them, because there's going to be the bad times, and during the bad times, look at the light at the end of the tunnel, because there's going to be the good times.
Just like Ecclesiastes, there's time for everything.
Our pastor's kind of the same way. He's a positive person, and so the number one benefit that I love about bear markets is they really create buying opportunities.
Absolutely.
You know, companies are on sale during bear markets, and these are buying opportunities that you would normally not have in a bull market.
Yeah, when things are really overvalued.
Yeah.
Mm-hmm. That's very true. So you should be looking at buying, not selling. Yep.
Yeah, adding to your positions.
Exactly.
I mean, what does famous Warren Buffett do? He's always buying when the market's down.
He's the only time they talk about him in the news and you know, just other media places is when we've been in a bear market, and all of a sudden you have someone talking about how Warren Buffett's buying XYZ company stock or whatever.
Yep.
Like, what is he doing?
He's buying.
Yeah,
he's
why is he buying?
Because everybody else is selling, and they're not thinking about the long term.
Yeah. So number 2, bear markets create balance.
That's right.
It's healthy. It keeps values from overextending.
Mm-hmm.
If we never had bear markets, then values would never be in check. And a bear market brings balance back into the markets.
You know, think of a seesaw.
Yeah.
You know, if it was always like this, and you're on the top part, you'd never get to get off of the seesaw. It has to come back. Things need to balance. Think about a balloon. If you blow too much air into that balloon, what's that balloon going to do?
Explode.
It's going to pop. So it's good. I'd rather have more bear markets than not, because a bear market brings balance back into it. Lets the air back out of that balloon. So you don't want to have a prolonged bull market, because the longer that bull market goes on, and by the way, you realize this last bull market has only been 2 years.
Yeah, we didn't
Because
actually
we
get
were
4
in COVID.
years.
And then, believe it or not, it was in 18 we had a little bit of a bear market too. So it's about every 2 years, and that's a good thing. You don't want to go 4 or 5 years or 6 years. It just is going to create everything's going to get overvalued to the point it just is ridiculous to buy.
You know, if you think about it too, having it where if we start averaging where we have a shorter bear market and we have a shorter bull market of, say, around 2 years, it also creates more opportunities, especially for newer investors or people who, they're not in retirement, but they're actually maybe a little earlier on in their planning and their investing, is because then you're not having to worry as much about trying to figure out like when you need to start buying. Like, well, okay, it's a bear market. So if you've been kind of sitting on the sidelines, now's the time to start moving in.
And even if you are retired and you have a balanced portfolio, you can rebalance it. Because what will happen in a bear market is the stock portion is going to go down. That's going to give you a higher exposure on your fixed income side, and you can rebalance and buy more when you're down. Does that make sense?
Yeah. So when you rebalance, you're actually selling off the parts of your portfolio that have gone up in overall value and buying more of the positions like the stocks when you're in a bear market that have gone down in value. And so your long-term net effect is a lot better.
Boy, this third one is a favorite of mine.
Yeah. Well, I'll let you do this one then.
Bear markets remove inexperienced day traders.
Yep.
And I call them day traders and gamblers. They get a really hard lesson in gambling in stocks when bear markets
that makes me think
occur.
of something, Bob.
Okay, all right.
How many day traders have you met that are still successful and it's been more than 5 years?
Personally, Shawn, I've never met one.
Yep.
Seriously, I've never.
I mean, there may
met
be
one.
some out there.
They'll be successful for a couple of years, and they'll be successful in a bull market when it's
It is weird, right? It almost seems like you hear about how successful these day traders are during a bull market.
Yeah.
But yet I never really hear about how great they're doing in a bear market.
You know the old 80-20 rule.
Mm-hmm.
80,
the Pareto principle, right?
20% is going to do well at it, but in your day traders, it might be 1%.
Yeah.
Okay. Yeah. And what happens is it just pushes them away. It gets them away. They learn their lessons. I saw this back in the early 2000s with the internet bubble.
Mm-hmm. You mean where you could literally throw a dart at a stock and do well?
Yeah. They had a monkey go to a Rolodex.
Oh, yeah.
in the 90s, and he just picked stuff out, and he did better than some money.
I don't remember that, but I remember you telling me that story one time.
Yeah, it was funny. But day traders get these hard lessons in these bear markets, and they go away. Mm-hmm. And day traders are not good for the markets. The markets are not about gambling. The markets are supposed to be about investing.
Right.
But they make it a gambling casino.
Yeah.
So what happens is when you get rid of these day traders, boy, they came on strong in the last couple of years because of COVID.
Yeah.
And we had these apps like the Robinhood app where everybody could, you could just go trade all that you wanted to.
Which on paper kind of makes sense. The idea of giving more people the ability to be able to invest and manage. But the problem though is the way most of those things are promoted and used. It's not about sound investing. It's exactly what you're talking about. It's day trading. It's what's the newest stock tip, to go into, and there's no it's not investing, and yet on our media outlets they'll talk about what the investors are doing today. In reality, no, they're not investors. It's day traders. It's speculators. It's not investors. That's almost unfair to lump investors and people like the day traders into the same group.
Well, I heard an advertisement I guess 6 months ago, and it's kind of going away now. Your paper press machine, call me and I'll give you this trading platform and the money press machine. I'm like, you're kidding me. This is sad. So what it will do is day traders create a lot more volatility in the market. Right. And as it weeds them out, the volatility will go away. Now,
basically they lose their capital.
They're always going to return. I've seen it. I've seen it over and over. They return when it's a bull market again. Market's been up a couple of years. All the day traders start to return again.
Yep.
It's just like there's a time for everything. It just repeats itself and repeats itself.
Well, let's go on to number 4 then. Mm-hmm. Bear markets prune out weak companies. So this can result in a much healthier market because we have stronger companies that are still around after we've gone through that bear market.
Exactly. And the price to earning ratios get back down there to where they should be. You shouldn't be trading at a PE ratio of 200 times earnings.
I remember.
300 times
I don't remember
earnings. That's ridiculous.
the exact stats, but I remember it was a Rivian, right? That that hadn't
You
even
got to be careful
produced.
about mentioning particular companies. But
I think it's okay. It's all over the news at this
Okay,
point. But
okay.
Rivian they hadn't even produced any vehicles yet, and it was I think it was Ford.
I don't know what it was, but it went from here to here.
There were multiple companies, like large companies, that had started to back them. Again, before they've even produced anything, it's just basically the idea of what they might produce.
Yeah.
And their price to earning ratios were crazy.
Well, because they hadn't had really any earnings. I mean, the price to earning ratios were 1,000 times earnings or something like that.
Yeah.
But
that's an example of like one of those things where, and now they've
like
dropped
that.
because it's kind of like
a cliff.
they're not going to be the next dominant electric vehicle manufacturer. It's and all of a sudden, all the wind came out of the sail.
And we're not making a recommendation to buy or sell.
No,
here.
we're not. I'm just using that, but that's just a great, more recent example of you get all this hype around something. Like Rivian was the stock tip, and it goes way up, and then it cratered.
That's so much day trading there again, and it prunes out those weak companies. Number 5 is bear markets push away short-term investors, or short-term traders, I call them. I don't like to call them investors because I think of an investor. Investing, it involves risk, and it's not for those that can't handle the short-term volatility.
Yeah.
Okay.
Investing is not for months at a time. It's for years at a time.
Many years at a time. Not even 1 year at a time, but it's for many years.
Yeah.
And if you have an aggressive portfolio, that needs to be for a 10+ year horizon. You have a moderate, that needs to be for at least 4 or 5 year plus horizon.
Yeah.
Conservative, even a 2 year horizon.
Yeah.
So you got to think of it that way, and there's all the different investment objectives that you have, and each one of those has different time horizons.
Right.
Okay. Number 6.
Bear markets allow companies to buy back their own stock at bargain basement prices.
I've been seeing this a lot, Shawn. That the inside, you'll see, it's called insider trading. It's those that are working for the company and they're coming back and they're buying their own stock.
Yeah, but legal insider trading.
Oh yeah, it's legal. It's legal.
Not the insider trading as in they're using non-public information.
You can see it on the charts.
Yeah. So what is the benefit, I guess, or purpose of that, Bob? So they're buying at these very low prices relative to where they've been trading.
The company can take back more control of its own company, because sometimes when a company starts to become publicly traded, they lose control of the company, and it's all about just who owns all the traders, stock traders now, or investors, versus what the company wants. So, and another thing I like too is during a bear market, it allows companies to buy weaker companies that maybe are in the same business. So the consolidation takes place and helps them to be even more competitive.
Right.
In the future. So it creates synergy and a stronger company. The strong by the weak.
So, all that being said, Bob, what would you say are the 2 main things causing the present bear market we're in now?
Well, that's a good one because it's changing quickly.
Right.
Okay. Well, of course, we know.
So as of the time of this recording.
And we know inflation has taken a big bite out of it. But we've also had news in just the past couple of weeks that they way overshot in the large companies like the Walmarts and the Targets
on their supply, their inventory.
So they have more inventory. They have record numbers of inventory now that really the markets didn't understand that they had that until a couple of weeks ago.
Yeah.
And just this morning, inflation numbers came out that they're lower this last month than they were the month before. But definitely inflation is hurting things. And the supply side supply side
so
opening
basically
up.
you kind of have those leading and lagging indicators, and we've been experiencing inflation from supply side issues that have kind of been just hanging around because of the pandemic of when it started. And even though we're starting to see a lot of those areas that are kind of resolving themselves where, oh no, we actually have more than enough supply, but it's kind of one of those things where it takes a little while for things to kind of catch up.
Things don't just happen overnight.
Yeah.
And we, COVID lasted a couple of years. We've got to work our way through that. The Ukraine-Russian war.
Yeah.
There's so many different opinions on this. I don't know if this thing is going to turn into like the Vietnam War and just go for years and years or not. I hope it doesn't. But
I mean,
also
it could be resolved quickly, or it could just kind of drag
linger
on. And the thing that's interesting about that on causing like oil prices to go up. Well, it's not so much because we're in the United States. It's not that we don't have enough oil. It's not that we're just selling everything overseas. But it's just kind of one of those where if you have a major area being affected by that commodity pricing, it will affect the prices in other markets, even if they're not directly affected because of like a supply chain issue. But then, as I think we were just talking about this a couple of days ago, you were talking about all of the pipelines coming back on, and the new drilling, and all the wells, because when you're talking about private land, well, there's no issue with the private land.
We live very close to what's called the Eagle Ford Shale. And for those of you that don't know, we live in between San Antonio and Austin is where we're making this. And we're basically 45 minutes from what's called the Eagle Ford Shale. It's a big oil area. And I know that today, from talking to clients that live in the Eagle Ford Shale and even talking to some clients that work for the oil companies, there's not a single piece of equipment that's even available. Everything is out there drilling.
Everything available is being used.
So what happened with oil was that the prices dictated what's happening today. A couple of years ago, because the prices were so low, they turned off the wells. They quit drilling. It wasn't profitable to drill.
Yeah.
Well, now with prices back.
Yeah. They're trying to turn those things back on, but again, the problem is it's not like a light switch where you just flip it on and great, we have more. It takes a while. Again, it's that leading, lagging kind of an indicator.
It is.
It takes a while for us to get back to where we're now producing enough to start to have the prices actually start coming back down.
And it's happened over and over. If you look at history, the oil companies, too much supply, prices go back down.
Yeah.
Prices go back down, they turn the wells off, or they quit drilling.
Then they end up turning like too many wells off, and then the prices start going back up again.
Yeah, exactly, because then you don't have enough supply. So that and the artificially low interest rates that we had during COVID.
Yeah.
That's going to take a while. I mean, they're saying they're going to continue to raise rates.
Yeah.
I think they need to slow down and see what they've done so far, how that's going to affect the future. Higher rates are really starting to hit real estate.
Yeah.
And I would not go out and buy any real estate right now.
Yeah.
Do not. I just wouldn't do it.
Because it's just math.
It's just math. Well, yeah, we had a whole podcast on that. So real estate is going to reset. Sometimes people in our area, they'll say, yeah, but we're in a bubble here. That can't happen here.
Yeah, it's different.
No, we're not.
Somehow we magically have buyers coming from places that I guess aren't affected by any of this.
Exactly.
Yeah.
So we're not an island in our area. Just, by the way, Austin, San Antonio area is one of the hottest growth places in the United States. But it's because of people coming from other areas.
Right.
And we've become so expensive now that we're just size they are. So
really
I
remember seeing the stats where it was like Chicago and Austin being compared. And, obviously Austin's a pretty popular place for people moving to Texas. Mm-hmm. And, when Chicago and Austin are getting to a price equilibrium, where's the incentive to move?
Yeah.
You don't have the same incentive that you had. Like, I remember a number of years ago when you had a lot of people that would come from places like California where they could buy two houses here for the same price as theirs after their price, the price of their home had already dropped. Well, when all of a sudden that incentive goes away because there's not as much of a difference, well, then you're not going to have as many people moving, which means you won't have as many buyers.
Well, hopefully this has helped you today as we've talked about the benefits of a bear market, and take advantage.
Yeah.
Take advantage of these low prices right now.
Yeah. And just like to leave you guys with, check out our episodes are available on audio, video. You can go to our website, christianfinancialpodcast.com. If you have if you want to find us online, you look for Christian Financial Perspectives. Mm-hmm. And we're also available. Call or text us at 830-609-6986. Thank you, and God bless.
We invite you to listen to all of our past episodes covering many financial topics from a Christian perspective. To make sure you don't miss any of Bob's upcoming episodes, you can subscribe to Christian Financial Perspectives on iTunes, Google Podcasts, Spotify, Stitcher, or Amazon Music. To learn more about integrating your faith with your finances, visit ChristianFinancialAdvisors.com or call 830-609-6986. Investment advisory services offered through Christian Investment Advisors, Inc., DBA Christian Financial Advisors, also known as Christian Financial Advisors Management Group, a registered investment advisor. Comments from today's show are for informational purposes only and not to be considered investment advice or recommendations to buy or sell any company that may have been mentioned or discussed. The opinions expressed are solely those of the host, Bob Barber, and his guests. Bob does not provide tax advice and encourages you to seek guidance from a tax professional. While Christian Investment Advisors believes the information to be accurate and reliable, we do not claim or have responsibility for its completeness, accuracy, or reliability.